All right, so today is January 27th, 2023. I'm going to start off by doing a simple bar by bar analysis. I'll also talk through some of the trades I took today. I didn't really take that many because, yeah, it was that day. But I mean, I did hit a good profit again, which was great. But I guess the question is, did I take good trades? So what I'm going to do is, like I said, do a simple bar by bar analysis just to kind of give you an idea of how I trade. This time I'm going to do it without the 20 bar exponential moving average. I don't know how far I'm going to get on this because I don't want it to be a very long video, but I'm going to essentially give you an idea of how a price action trader is trading. Granted, there are a few things that I'm not going to share here, or at least I'll just give you some sort of general concept of a few things that I would normally look at before the day opens. The first thing I would look at is how we traded in the overnight session. For instance, this particular time, we actually had a sort of trading range here, and I believe we had a gap down. The market is in an overall bull trend, and when we came down here, because of all this selling here, I'm expecting some selling as well. The problem for me today was I think I completely did not consider the higher time frame movements at the time. There is a moving average, a 60 bar exponential moving average here, supporting price. It would probably support price here. And I didn't sort of consider that. But anyway, let's actually get into it. All right, so we'll start off by bar by bar. Whenever I'm trading the day, I make my decisions based on the bars. The first bar was a doji, but it was a gap down, right? This is kind of the average price, round about here. Normally I look at the average price, but I wanted to kind of do this without looking at the average price. But I know the average price was somewhere around here because the price was holding the average price here. Yeah, and that's the exponential moving average, right? So we're kind of around the average price, and we have a doji. That's very much indecision. Now, for me, I'm seeing whenever I'm looking at this, I'm asking a question. We have buyers down here. We have sellers up here. We've kind of trended up, but we didn't trend very high up. We actually gapped down, so the sellers are in this region here. So it makes sense why there's a lot of indecision here because we're at the average price, and this is really the sell zone. However, the sellers have not really sort of stepped in, so we're really interested to see what happens. The next buy is another doji. I think at this point I actually took a short here. I was a bit aggressive, and I was targeting at least maybe somewhere down the lows. Usually I go for 20 points whenever I take a trade. And the idea was, since this might be a higher high double top, I assumed that this was a minor reversal and therefore we would pull back. I didn't see this as a pullback itself. I thought this was a final flag. But let's carry on. Then we now get a wedge top. But the problem with this wedge top for me is the fact that it's closing with a lot of bullish pressure. Normally I love the wedge tops that have bear bars, so this being a bear bar, but actually no, this is actually a bull bar. So it's showing you that there's a lot of buying, and we're starting to print slightly above the moving average. The moving average is here, but you can ignore that right now. The point is we're still bullish here. It is a wedge top, so I'm in danger of the fact that it could break out to the upside. And remember when I saw this, I said anything above this is a buy, or at least it's something I should consider. We get the breakout above the wedge. At this point, I stop myself out, and I revert to longs. In fact, you can almost say I didn't hit the reverse button, but I decided to go long here. And the reason why I decided to go long is the fact that this is a sell zone, and we're now buying. If say the moving average is here, maybe I should put the moving average on. I'll do that right now. 20. Okay, here we go. Visible. All right, there we go. I think it would be better because now I'm realizing that actually all my decisions are with the average price. Well, anyway, so with price action, the idea is that psychologically we are looking at how traders are trading around the average price, right? At least that's the way I like to view price. You can almost argue that that's kind of my edge in the sense that I'm looking at the average price at all times. So this is the 20 bar exponential moving average. This is the 20 bar exponential moving average on the 1 hour chart. You can see the 240 bar on the 5 minute. Okay, so this is the price action already at the open of the day. Now, from my standpoint, why is this a long entry? It's a long because the sellers are not stepping in. The buyers are overcoming the sellers. They've broken out of a wedge top. So the sellers should have sold this, but instead, they've broken out of this. They've broken out of that. They've almost closed above the previous day's high. They closed at the previous day's high. And so therefore, whoops. And so therefore, um, this is telling me that the day is actually a lot more bullish than bearish, at least from the way I'm reading it right now. So it wouldn't really make, I mean, it didn't close exactly above, but it was close to being above. Actually, no, it did close. No, it didn't close above. This is the previous day's high. It didn't close above. So the day is very bullish at this point. And therefore, it's telling me that I need to, and we've broken out of a wedge. So this is a trading range we've broken out of. So we're going for a possible measured move. So what you would do at this point is you would measure there. So there's a bull target up here, right? Where the bears who sold here have to sell again, and they'll probably sell at this price. And the bulls will probably try and take profits here because this is a one-to-one. Imagine they put their stops here and they went long above here. Right, so let's move on. All right, so we finally get to the measured move target, which is here. And as you can see, there's some profit taking here because you have a wick. We're still above the average price. This is a breakout, and therefore chances are we're probably even going to go for higher prices. All right, so now we have some profit taking here. As you can see, we have a pullback. So essentially what's happened is some bears who sold this high are selling again and probably getting out of 50%. So you can imagine here, those who sold here, over here, and they sold again will get out here. So there's a whole bunch of them getting out around here. All right, so now we have a pullback. This is bar 7. Bar 7 is the one I put the dot on. Bar 7 tends to have a news report, the 10 o'clock news report, and it tends to be very, very volatile. It tends to bring a lot of volatility into the market. As a result of bar 7, we have price racing all the way down to the moving average, and look at what happened. Traders are waiting at the moving average to buy, right? So essentially we have a 50% pullback. So people who have seen this move have placed their stops around 50% and some at the moving average to buy. As a result, this candle has shot up. So for those of us who are long, we've seen this candle with all its volatility do this. Chances are we're going up for another measured move. So I'm just going to push this up, do a measured move based on this breakout here. Why did I choose this? Because we have a trading range here, right? So you can imagine, say, those who actually are going long put their entries here, they put their stops below this candle, and they're targeting here. Okay, so next bar. All right, so traders are now beginning to take profits. We have another bull bar closing on its high, but we're also aware of the fact that we have a wedge top forming. So we have this push up, a pullback, another push here, a pullback, and a third push. So that's 3 pushes up. So right now we are getting to the point where if we're long, we want to start looking for an exit. And there we go. We reach the measured move target. And look at what happens. We take all this profit and we form a bear bar. Now we have a wedge top. We fulfilled the criteria for the bears. We have also a buy climax. And what I mean by that is, look at the steady bull trend, and then all of a sudden you have a climatic rise. So far from the moving average, this is very unsustainable. And remember, the bears, they sold aggressively at this price, and now you're giving them a better price to sell at. And therefore, they're probably going to be a lot more aggressive than this. I didn't take this short because at the time I thought we were going to get one more leg up, but this was actually the third leg up. I missed this as a wedge, but I took my profits at this point. All right, so we now have the first reversal, which usually is minor, right? Because this is such a tight, steep channel, it's very, very different. Not many bears will probably get into this, but as you can see, some have actually taken some profits in, and some have actually sold that. We have a micro wedge over here. This is 3 pushes down, 1, 2, 3, right? And it's the reason why this wick has gone up. Essentially, this was once a bear bar, and then it's gone all the way up, is because of this candle over here. So you can imagine all the bears who actually sold this close, they sold here again, and they've gotten now here at a profit or break even, and that causes this, right? So basically they bought back their shorts, right? So price is possibly going to try and go even higher, and as you can see, we actually went down to the moving average. You have some bulls who missed this move, who maybe, I think that is a 50% pullback. I mean, it counts as a 50% pullback, even though it's not exactly 50%. It's close to 50%. But some bulls who missed this move are trying to buy to make another leg up, right? So this is a wedge as well. So it's 3 pushes, 3 micro pushes. So on a lower time frame, we have 3 attempts to go down. And because of the number of tails on the bars, I can imagine bears will probably take profits here, because again, that's what's happening. And as a result, you have bulls who are buying. Now you have bulls who are trapped, because now this bar, instead of it going up, it's gone down. And it's about to break the moving average and also break the bottom of the wedge. So right now they have some bulls who are trapped in here. So what do? They buy the moving average again. They get back to their entry and they recover their shorts, and as a result you get this bear candle. We now have some sideways motion, and we have a little bit of a triangle. So we have 3 highs, and this is actually below this, but it's a trading range over here. So this is breakout mode. Also, it's a wedge, a bigger wedge. 1, 2, 3. And right now the bulls again are trying to reverse this, but they're not getting enough buyers. And now we got a breakout below the wedge. I think this is a measured move for the breakout here, right? And essentially what I mean by that is this is the trading range. Those who are long put their, those who are short put their stops here. They're going for 1-to-1 here. There are those who are long, they have to buy again to try and get the price up here. But it's such a strong breakout, we should get another leg down. And exactly that's what we get. But right now we begin to form a wedge. We have 1 push, a second push, and a third push, another wedge bottom. So 3 pushes is a wedge. And also this is, I'm missing, just going to put an indicator on, not so much an indicator, but a, there we go. Alright, so this is low of day, and we have technically a a high double bottom, but it's very unclear because right now we have a wedge, but there's a chance that we could still go lower and start a bear trend, right? There is the 20 bar exponential moving average on the 15-minute chart over here, and if we actually put that in so that we can, instead of me sort of guessing, I'm just gonna, we don't need this one, we'll turn it to 15. So you can see we tested it over here and we're testing it again, so chances are we could bounce off it. Alright, so we now get some indecision, some sideways, we get a micro wedge, we get a higher low double bottom, then now we have a wedge top. So now the bears, what they're hoping is they can sell this bar to start a bear trend, because it's 3 pushes in this direction. However, if we break in the opposite direction, those bears are trapped, and therefore they would wait to, and they need to sell again to get out break even. So chances are what will probably happen is we can either get a bear bar over here and we would sell it, or we get a bull bar and we buy above this, and we get a bull breakout above the moving average. So chances are when you see this, chances are we're going to try and come back and test this high, because now this is the middle of the range. No one is really interested in selling. Also, this is a breakout test of this level. So chances are we're probably going to get some profit taking over here, which is exactly why we have a doji. But it's so much buying that we're still getting bull bars. We got to break out. Getting all these bulls out. Remember I said that these bulls are trapped, so they have to buy again. And now they're all getting out, break even, and some of them have made money. And that's the great thing about trading ranges. It's that you can buy these ones and buy lower, and you know you're going to get out a profit on your second sell. But this is so climatic that it's probably going to yield some profit taking. Or it's going to lead to some profit taking. Therefore, I expect a bear bar, which is exactly what we have. Now we have a double top from this bar to this bar, right? So we now have a double top. This is a good sell signal, and the bears can decide if they get a bear bar below this to sell. Problem is that for the bears is that this is 3 strong aggressive bars above the moving average. This is a minor reversal. It's very difficult to find sellers at this price. If anything, you're probably going to get buyers, because now you've given the buyers who've missed this move a discount. It's almost like the buyers who missed this move, they bought it here, so they're looking at the same thing over here, and therefore you get this candle going higher, another candle. Now we're kind of losing momentum because we're too far from the average price, and therefore chances are we're not going to get big massive candles anymore, because the risk is too high for the bulls. We're also in the sell zone, and that is the reason why we're now getting a lot of profit taken here. But we're still getting bull candles even at this point. We have a wedge, a micro wedge, and of course a micro wedge will lead to profit taking and some bears scalping short, limit order bears trying to make some money. Right, so we have 2 legs down to the moving average, and usually whenever you have that usually tells you that this is just a bull flag. We're probably going to go higher, and therefore we get another breakout above the wedge, but we haven't closed above this, so chances are we probably get another bear bar. Oh, we got a bull bar. So what that means is we get a breakout, and there is a measured move on this. So this range to this range. So price needs to come up here, which incidentally is about here. So those bulls who bought here have their stops here, they're targeting here, and the bears are looking at that level too. Okay, profit taking. Now we have a second leg down. So essentially what's happening is a double top here. Bears are selling this double top. However, this is not a great sell signal, so we're not probably going to go very far. We're forming tills. Alright, so we have another set of bulls who missed this move, a 50% pullback, buying this area over here, which is like half of this, and they're doing that. And that is essentially what you got to remember. If you get 3 bull bars aggressive far above the moving average, you're probably going to get a second leg, and we got a second leg. But now we have a wedge, 3 attempts to go higher, and this will probably yield a bear bar. And also they hit the measured move target, so there'll be some profit taking, hence we have the tail. Right now we have a double top, we have a wedge top, so this is a high probability setup for a short. So anything below this, we trigger the bears below this candle. This is now gone up even higher. We can say this is a 50% pullback. This dot is bar 40, meaning that we've gone halfway through the day, so we should probably reverse here, or if anything we break out. Alright, we now have a higher high, a double top, which isn't good for the bears, because we have pushed price all the way back to the top of the range, and therefore is still a lot of selling pressure. We're expecting this sort of price action, however we're not getting it. We're getting sideways, a lot of indecision. We have a little bit of a triangle here, or not a little bit, we have a triangle here, and then we now finally get the breakout, but it has a tail at the moving average. That is not a good sign. You want very strong conviction. You get another doji at the moving average, which tells you that there's not enough selling happening over here. We've broken the channel, and therefore chances are we will probably either break through, or if we don't, we bounce up and make a new high. We got a doji, and we're forming, and it looks like we're forming a wedge. We're in a channel, so it doesn't look good. This is an exhaustive sell climax in a wedge, so chances are this is the end of the move. We have 3 attempts to go lower. The first attempt, second attempt, a pullback, and a third attempt. So right now, if you're short, you probably need to get out. It's a double bottom, so this is a trading range here. Wedge up, wedge down, double bottom. Um, and this is 50%. I mean, it's higher than 50%, but this is a strong indication that we're probably going to double this range. So if anything, let's just assume that we are going to do a measured move. We would probably be targeting this level here by the close. Whoopsie, showing too much. And then we get a bull bar, and I'm gonna stop here because at this point I got tired. But as you can see, we got a bull bar, and then we got 2 bull bars. Now this is a breakout. We've broken out of this. We've broken out of. We're at the top in the sell region, and we're getting excessive buying. Bull bars closing on their highs. Bulls are still buying here, so that for me is telling me that this line is now support, not this low. So whenever you're seeing support on the moving average in from a price action standpoint, as you can see, support here, support here, support here, support here, this is telling you you're on a trend. And this is actually a small pullback bull trend as such. And the small pullback bull trend is one of the strongest trends that you could ever have. They don't look small on the chart. They don't look strong, but they're really strong because traders are taking profits as we keep going higher, and they keep buying on the moving average. So their risk is reduced. It's not like this. This is not sustainable, and therefore this doesn't really go very far. A small pullback bull trend is what we have here. Every time we hit the moving average, we keep going higher. Every time. Then we get a climax, so we got to go sideways to the moving average. And then we have another climax, sideways, sideways. And remember, this is our measured move target here, which we've just reached. And since we've reached the measured move target, remember what I said, traders who sold this have to sell again, because those who sold here, their stops are over here at the bottom of the trading range, and chances are we're going to get a reversal. We get a massive bear bar, right? This is a minor reversal. And what I mean by that is the first reversal after a very strong tight channel is usually minor. There's usually an attempt to try and break this high. Right, so we now have a micro wedge. 3 pushes down, 1, 2, 3. That will yield us to go higher again. And then we get a small breakout to the upside. However, this breakout is at 50%. If we can't get past this level, the bears will sell aggressively, and all they need is a bear candle. They get the bear candle. So now all they need is for price to go below this, and if it goes below this, all the bulls will give up because they can't make another high right now. They're not getting enough buyers. This is a setup for a major trend reversal. Now, why is that the case? Because if you think about it, they were very successful in keeping a trend line straight, a very straight trend line. No, the word isn't straight, so I'm just a bit exhausted at this point. They were very, very successful in keeping price on this support level for a very long time. And then they couldn't do it here anymore. So now you're showing signs of weakness to the bears, and the bears now use that as their signal to start looking for their own entries. Now this happens on all time frames. Whenever you get a break of a trend line, you get a test up. Usually this test breaks this high. Just like we have a break of a trend line here, we'll have a new test and we'll probably go down and try and break this low. So you get another attempt to go down. I have a red dot there that just tells me, today this is time to stop trading. And now we have 2 bear bars closing on their lows, testing the moving average. We get a bear breakout. That for me shows a lot of bulls giving up, and a lot of bears selling, testing the different points. So we're doing a breakout test over here, which is the breakout of this point. Notice how this is so strong compared to this. It is at the end of the day. And now we're beginning to test this level. Some profit taken over here. But it's a serious breakout. Now we're beginning to wedge. 3 pushes down. Oh, wrong one. 1, 2. That's a third push. So chances are we're going to reverse here, which is also a test of this low, the bigger trading range low. There we go. So we're going to get a bull bar. And I think that was the end of the day. Yes, that was the end of the day. So essentially, when you're trading as a price action trader, you are looking at every single bar, understanding the psychology of of what the bars are doing. There's a lot more to it as well that I've sort of glossed over, to do with why these gaps are closing. Like we have a gap over here, and whenever you're in a trading range, these gaps tend to close, and you see them closing, and profit taken happens there. But I can talk about it in another video. But I just wanted to explain how I would trade, or how I traded today. I took a trade, like I said. I first went short here. Actually, I will show my trades. It's probably easier that way. Oh, it's showing all the thingies. Let's do it this way. Because I'm trading so many accounts, it puts everything all in one go. Alright, here we go. Alright, so I so I traded this. I first went short, and then like I said, this 3 bars we broke out above, so I went long straight away, and then started scaling out, and I finally took my once I got the 20 points that I wanted, I took some profits there. Went long again, and then because I noticed that we're still going higher. Oh no, I was still in some position. Yeah, so I was long. Actually didn't scale out, so went long, scaled out some, added, and then got out here because I noticed we had a wedge, and then got my final position over here. I did consider taking a short here. I did take it short, added here, and then got out a break even over here. Um, then I took a short over here. It went down, then it went back up, and I was like, this isn't looking like a wedge. I thought the wedge was this, and this. But then when I saw that this was the first major pullback, and this was a micro channel, so I thought we're probably going to get it one more leg up. So at that point, I basically took my profits. Not profits, sorry. I basically I stopped myself out. Um, then I took a short over here. It says I stopped out here. Oh yes, so I took a short here. I somehow messed up my stop. So my stop was supposed to be above this candle, but somehow it was a bit lower. It was still here, and it stopped me out. And then we went down. I took another short here because I was like, this is a double top. Below this candle is a short. So I held that short. And what did I do? I scaled out some here. And I had 1 or 2 contracts left. And at this point, I noticed that we had this wedge form. And I think when this bull bar showed up, I just got out when it closed because I just thought, this is not what I'm expecting. I'm expecting this, but instead we're getting a lot of sideways indecision at the moving average. This is probably going to go higher, so I got out here. And that was all I did today. Those were my trades. And as you can see, I made my decisions based on that. Why did I go short here? Because I think I saw, well, we broke below the wedge, saw this breakout, so I assumed we would probably go lower. When I took the short, I could have gotten it, and I was actually going just for 5 points, but it just hit me. I was like, why am I selling at the bottom of a range where all the buyers bought? So I got out for break even, and then it now got to my 5 point target, which is fine, but it was just not a good trade. And then I did consider going long here. I didn't like this signal bar, so I didn't take it. And then I started talking to my colleagues in the Discord, and then by the time this broke out, I was like, oh damn it, I don't want to go long here because my risk is I would need to put a stop down here, unless we have a big breakout, in which case I would raise my stop. Yeah, so let's say for instance we had this candle had printed, then I'll put my stop below here, but at the time I had to put my stop down here, and I just didn't want to risk that much, and I was a bit exhausted, weirdly around 11:20 today. All right, so that was how I traded today. There are a few things I want to consider now, and a lot of it has to do with this yellow line, the 9MA. I'm not very good at using it for taking trades yet, but I'm beginning to see that there's probably some merits to it. But I use it just to see if a trend is a strong trend. If we keep bouncing off the 9, it tells me we're in a very strong trend, like we're getting these breakouts. As you can see, we weren't bouncing per se here. It was a small pullback bull trend. However, it wasn't as strong as this trend was. Although this didn't last as long as you can see, we had the massive breakout. What should I have done differently? If I could have traded the entire day and I saw this bar, this would have been such a good signal for a short. At least taking a short below 74 would have been amazing, because this is a second entry short after a minor reversal back to the MA, and then expecting this. Um, yeah. So I think once you've traded price action for a while now, you just start to see these things and you just feel a lot more confident in how you can trade them. All right, so that's my recap for today. And we'll see what happens next week on Monday. Oh, yeah, I think we're probably going to go sideways on Monday. And that should even be more interesting because I prefer the sideways price action, at least for the early part of the morning. I tend to know what we're doing when we're sideways. When we're trending in a broad bull channel, I think these are the most confusing things to trade, because you see this big down, big up, test low of day, and then it does this, and you're thinking, oh goodness, it's not going anywhere, and it's probably going higher, and it can be frustrating. So that's essentially the issue with these things. All right, again, next week.